Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis update is for Monday, June 15th through Friday, June 19th, 2009. Well, last week turned out to be really an interesting week on Wall Street, folks. I'm going to talk a little bit about that. We're going to get into the charts. I want to show you the key levels that we have in our charts for this coming week, really on Monday, Tuesday, what you're going to be watching for, and the rest of the week. I want to discuss a little possible change in character we saw late last week, although it hasn't confirmed yet, so I really want to keep a close eye on that in the early portions of this week. First of all, we can talk a little bit about last week and how it played out. Last week you had some up moves and some down moves, but you really stayed sideways for the most part. And I can show you the 60-minute chart quickly to show you exactly what I mean by that. Well, here was the 8th of June. That was Monday right here. We gapped lower on Monday only to recover in late in the day and squeeze higher. Tuesday, we had a nice little move up. Wednesday, we moved down and then rebounded late into the close. Thursday, we had a big move up and then really sold off late in the day. And that's what I liked about the change of character possibilities. You know, all the time we're kind of watching to see whether or not we're going to see a major change here, where instead of these buy programs coming late in the day, do we see actually sell programs come in where people start to dump? Now, there's a lot of different ways to look at these buy programs. Some people are looking at them as the Federal Reserve or some unknown body out there like the Plunge Protection Team is coming in and making sure the market does not fall and stays on its feet to keep consumers happy, consumers buying as much as they can, and really keeping the panic out of the market. That may be the case. The other way to look at it is you have a compilation of hedge funds and mutual funds that still have not been in the market, and with the end of the quarter coming in the next, I don't know, 3 weeks or so, 2 weeks, they need to make sure that when they show their statements to their clients, they can show that they are in these positions and make it look like they were in them the whole quarter when we had this monster rally. I think that's the bottom line. You have to really look to see if that's the case, or is there a combination of the two? I personally believe a combination of the two. I think it's a concerted effort to make sure the markets are staying up here of late, making sure this market can stay on its feet, and at the same time, it's partially, some window dressing going into the end of the quarter. Now, this week is options expiration week, guys, and options expiration is always a wacky week. So please remember that. Whipsaw Wednesday, our coin term for Wednesday of options expiration date, is coming up. It's known to be one of the whippiest days of the whole month, and you need to be ready for it, guys. That just have to be ready for it. Now, what you can see here, folks, is Friday. Friday was a weird day because you really had that outage at the New York Stock Exchange, which kept volume very low, and you really traded sideways and then slowly up. You had the little bit of a buy program come in, and that's what I mean when I say here's the intraday 10-minute I'm showing you now. That's what I mean when I say there was no confirmation yet on that late day sell. I love the sell off late in the day on on Thursday, how we saw that sell off. That's a rarity. We almost never see that type of market action. But the fact of the matter is, the volume was so light here on Friday that you just didn't know, and you got a little bit of buying, and it took the markets up very gently here. One candle here of buy programs, and then another one right into the close to make sure the market stayed positive. So it did not take a lot of money to do it on Friday, and really, I don't put a lot of stock in that. Really, Monday will tell this the case, and what I mean by that is if you look at the previous couple Mondays, going back to the 8th, the major buy program really came in on Monday. Monday was the biggest up move pretty much of the week, just huge up move here. Look at the size of that up move, then a little bit of selling into the close as the buy program subsided, but nonetheless, just a huge buy program as you can see. And on Monday, I really want to see, does that happen again? If it happens again, then you just got to step back and let this market play out because it's too much. The powerful money that's behind these moves up, it cannot be fought. All right, it's like fighting City Hall. They say you can't fight City Hall. This is the same type of situation. You really can't fight the Federal Reserve or the PPT or whoever is doing this, or the mutual funds that are buying Mutual Fund Monday, whatever it may be. You just cannot step in that way. So please remember that and just be very cautious in that regard. Now, if we see a little bit of selling into Monday's close tomorrow and we don't see a buy program, well, maybe we could see something else. I mean, maybe that's a different change in character showing its signs from Thursday's price action that I did find interesting. And there was volume behind it on Thursday. That's why I liked it, is because of volume behind it, and then really not a lot of volume on Friday. So I kind of discounted this minor move up into the close. Yes, it was a little buying, but it could have been just a few individuals there jumping in, or a hedge fund or two picking up some shares into the close. All right, now what to watch for this week, folks? You have some economic news, very important to know and watch for the economic news. I think that's very important to keep in mind because economically, this is really going to be the driving force. You have options expiration, you're going to have whipsaws on economic news, and we're going to really find out whether or not this market has any guts behind it to sell off, or is it just going to continue higher. These are your key levels in the charts. All right, check a look right here. You have a big level. We've had this level, and these are the same levels from really the last two weekend technical analysis videos because the market hasn't gone anywhere. So these levels are still intact. They're still holding up. And what I want to show you here is you have your 95.20 level. Very, very key level. You can see how you hovered on it right here before breaking up and then closing back below it beautifully. We were below it to start Thursday, got above it, and then came back in. And then you can see on Friday how the 94.40 level was just so key. You started exactly at 94.40, by the way. You opened to the penny at 94.40, just like you closed on Wednesday to the penny at 94.40. And you went down 40 cents below it, and then you went up 40 cents, precisely, to the penny. Below 40 cents, above. Look at that symmetry in the market. We talk about the symmetry, guys, and that's exactly what I mean. All right, and then what happens is you just trade alongside it, right above 94.40, which as long as you're above it, you have to have an upside bias. That's exactly what happens, and you trade up almost to 95.20 into the close, pull back, and right up there with just a closing price a little bit below that at 95.08. So the levels to watch on Monday will be the 95.20, and then if you get through that, then you're going to watch this high at 96, right around 96.15 or so, which was the high from Friday, right up in that range. All right? Excuse me, the high from Thursday. Now on the downside, folks, 94.40 is a key level to get below. If you get below 94.40, watch the double bottom right down here at 94. And if you get below that, the big level to watch early next week is 93.40. 93.40 is really the number one level I am watching, and the reason being is because every time you got below 93.40, they rallied the market back above. So you have to watch that as a key level. Let me show you what I mean by that. Scanning back here, we got the level, we got it below here for a brief minute, and then we rallied it back above, or they rallied it back above, I should say, as you saw the market spike back up to 94.40. All right, so this 93.40 is a very key level right on this date, but even go back further. All right, let's go back to last Monday. The market traded just below it here, but by the close, they got a buy program, closed it above. So what you're seeing here is they're not willing to let this market close below the technical level of 93.40. If you go back to even further, over a week ago, you can see how the market was trading below it into the close the last 15 minutes of the day. Buy program got you back above 93.40, and then the market rallied up from there. So you can really see how this 93.40 level, they're just not letting the market get below it. They are not letting it get below at all or close below. So what you're looking for, again, is a close below 93.40 next week, and that could yield a little bit of extra selling, and we'll see how far it takes us down. All right? Now let's go to the 60-minute chart here in the remaining time frame and take a little bit of a look here. And what you can see is our key levels laid out on the 60-minute chart, and you can really see very, very clearly how this is the 95.20, 94.40, and 93.40 level, and each time it gets below on the 60-minute, it rallies back above, just briefly got below here. Now you also have another trend line I want you to watch, and this one's very, very key. All right, if you take the low going back to the 26th of May, and connect it to the lows here on the 28th of May and just extend that trend line all the way up. Look at how it beautifully pierces here before rallying, and then it really huddles right on the top of this line before rallying into the close. This green line is going to be the big one you have to watch for a break. All right, that's what you're watching coming into the close on any day next week. You get below this line, you could see some major, major selling in this market, and a possibility of some nice downward movement if we get below this. But this is exactly why we didn't break down on Friday. There was no volume behind it, and you stayed above the green trend line. This is exactly on the 10th, which was last Wednesday, why you didn't break down either. All right, so remember that. See how they pierced right there, and then they rallied above? Everything has to do with this green trend line right now, and you're going to have to break that green trend line to possibly see some more downside. Now, you do have a little bit of a bearish candle in here, or a bearish formation off of this down move. See the nice down move right here? I'll draw it in right there. And then you have the upward sideways move, which could be in spirit of bearish flag pattern. But the volume was too light to really tell. We'll have to see what happens on Monday. Monday should be key. Again, next week you have some economic news. You have Options X. Really going to be interesting. I believe Research in Motion has earnings as well, RIMM, which could be for tech a big player here. All right, folks, that's all for this weekend's technical analysis update. Please come join our research center. The education, the guidance is second to none. The things that we have and reveal in there to teach and really educate on the technical levels of stuff that is pretty much proprietary. Not a lot of other people talk about this stuff. You will blow your mind away. So we do encourage you to come and join that. Also, come join the chat room if you're more of an intraday player and want to really start to learn that stuff. Have a wonderful weekend. We'll see you next week. Take care.